macros are on the mend, much to the delight of PM Modi and his team. GDP growth for the fourth quarter came in at 7.5%, well ahead of expectations. Mind you, the Q4 numbers have put India ahead of China, making it the fastest growing economy in the world. What is more encouraging is the stunning show by the manufacturing sector, which grew at 8.4%. And the good news doesn't end there. April fiscal deficit came in at 23% of the full year estimate, mostly in line with Finance Minister Arun Jaitley's target.
The twin data comes as a big relief for Team Modi, which has been working overtime to get the fisc back on track. An elated finance minister says that the macro numbers are a clear sign that the economy is on a recovery mode. All eyes are now on RBI Governor Rajan, who is set to release the bi-monthly monetary policy review on Tuesday. The big relief on the macro front, and has it really set the stage for Rajan to relent as well, is our top story right here on Business Tonight.
Strong sentiment fueled by hopes of stable policy regime has got growth back on track. As Modi Sarkar completes a year in power, macroeconomic data shows that economy is turning the corner. India's GDP growth in the fourth quarter of financial year 15 has come in at 7.5%, much in line with the government's estimate. But for the full year, GDP growth stood at 7.3%, a tad lower than the advanced estimates of 7.4%. Weak agriculture and mining sector growth drags the economy. Agriculture growth for the last fiscal was merely 0.2 percentage point versus 3.7 a year ago. While mining sector also drags the index, coming in at 2.4% versus 5.4% last year. But the government's thrust in manufacturing through Make in India may finally be showing positive results. Manufacturing sector grew at 7.1% versus 5.3% last year. North Block's chief lieutenants say that the growth numbers are encouraging.
It's absolutely clear that the economy is in a recovery mode. I say that because the services sector has significantly improved. It's doing well. What seems to be a silver lining is that the manufacturing sector is now growing.
In fact, the government's chief economists believe that the crude correction has still not been priced in.
The big decline in oil prices and therefore the positive impact is going to be felt in 15-16 because it began in the third and fourth quarters of last year.
But experts warn that below par monsoon could play a spoil sport going forward.
The Q4 numbers, to my mind, are surprising. For agriculture particularly, given what we see of the production of fruits, vegetables, something must have counteracted that.
While the battle against inflation has been won, India is far behind the double-digit growth that it aims for. And that is why all eyes will be on Governor Rajan on June 2nd.
All put together, there is a strong case for rate cuts to happen.
While both the government and the industry are clamoring for a rate cut, has Rajan squeezed his window to oblige given the impending Fed rate hike, and has the debate not shifted to how much will he reduce rates by instead of will he at all? Priya Singh with Ruchi Bhatia, ET Now, New Delhi.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.